The Central Bank of Nigeria has been battling with a free-falling naira since 2015. Amid this free fall, the Apex Bank continued to deploy stringent monetary instruments that have failed to deliver the much-desired halt to the weakened naira. Now, on the 27th of July 2021, the CBN governor, Mr. Godwin Emefiele, at the fourth MPC meeting for the year, announced a ban of Forex sales to operators of Bureau change in the country in the bid to curb the dubious and unwholesome practices by the BDCs. That's according to the central bank with regards to sales of Forex. Since the new foreign exchange policy took effect, the naira has had an eventful run with the state of its. I beg your pardon, has had an eventful run with the rate reaching as high as 525 naira to the dollar at the parallel market before appreciating back to 510 naira to a dollar on Monday, 9th August 2021. However, economic experts have the view that the implication and effect on the economy and Nigerians will be adverse as the country remains largely import dependent, which will affect the cost of production. A lot of reactions regarding this. But joining me to make more sense of this is a semi-senior corporate finance at Deloitte Nigeria, Temitope Olugbile. It's good to have you on the show. Thank you for your time.
Hi, good afternoon. Pleasure to be here.
Yes, it's been about 3 weeks, I guess, since the central bank placed a ban on sale of Forex to BDC operators. Now, what would you say? A mixed bag. A lot of reactions we've gotten today. Some say we step in the right direction. Some say no, this is not the way to go. But how does it come to you?
Okay. So, like you said, this policy guideline took effect on 27th of July, and I mean we're about a month after that, and essentially what the central bank was trying to do was to focus its Forex sales, because it's to focus its Forex sales on and to place the Forex sales in the hands of people that really need it, right? And so that's why it has then shifted from sale of Forex to the BDCs to the commercial banks. And with the commercial banks, something that was not so prevalent with the BDCs is that if you need Forex and you want to go through the channels of the commercial banks, you essentially have to be able to defend why you need the Forex, right, with supporting documentation. So that is a way to then channel Forex sales to the hands of people that really need it. And it can be a cumbersome process going through the bank. So what we've seen since then is that we've seen commercial banks set up designated tellers, trying to ease the process in a way. But like I mentioned before, you have to be able to support your Forex demands with supporting documentation. So that then means that if you need it, if you need Forex in an emergency situation or a matter of urgency, you might not really be going to the commercial banks, and then that would then introduce a black market premium, in a sense, a parallel market premium. And because there is that cumbersome process through the bank, through the channels of the commercial banks, going to the parallel market, there will most definitely be a premium. And what the indirect effect, in a sense, of that is then a widening of the gap between the official rate and then the parallel market rate. And we, like you mentioned, we saw that happen immediately after the news was the guideline was introduced. We saw parallel market rate rise to as high as 522, 525, and then now we're about between 510 to 515, while the official is about 400, 410. And so we see that widening of the gap essentially, and that is what is the fear of some, that could potentially widen further and in the weeks to come.
Yes, indeed. I was to follow up with that, because I'm thinking that how long do you think we'll stay with this? Because there's that upbeat one way or the other on the parallel market, because people still have to use that source, people that cannot get to the banks to get this Forex. Then what do you think can be done to simplify the process? Manufacturers and some business owners that we've spoken to are saying that the banks will make it a little bit cumbersome for them. The process could be a little bit strenuous, and they might feel like, let's just opt out and get this Forex from behind under the table, like some will say, instead of waiting endlessly for the banks, and some have time limits. So how do you see all of this being addressed?
Yes, so there's that time limit. So for the manufacturers, for those that want to go for medical tourism, there's some kind of time limit for some forex requirements, right? And so, in a sense, it's what they've done is cut out the supply from the BDCs and then channel it all through the commercial banks where you require that cumbersome process. But if it's possible to then say, okay, regulate the BDCs some more, give them more stringent regulations in the fact maybe an option could be that, okay, you sell to the BDCs, but then you have them report back to you on like the rate. So what was a problem with the BDCs was they buy at an official rate and then they sell at a rate much higher, tending towards the parallel market, and they, in a sense, they make rent seeking activities actually was taking place in that, and that was the problem. So if you could regulate them in a way that you are convinced and you are sure of the rate that they're selling at, so that is a way. And there's all kinds of technology measures that can be put in place for that to then regulate the BDCs some more to see that, okay, there is one channel that is more cumbersome, there's another that is less cumbersome, but essentially what you're trying to do is make sure that one is not one operator, a BDC operator is not carrying out some rent seeking activities. So then regulate them to be sure of the rate that they are selling the dollars to retail end users and to users that need this forex as a matter of urgency, like your medical tourists and even your manufacturers. So then you don't have a long queue at the commercial banks, and sometimes it could be a matter of life and death, or it could just be a matter of your economic recovery and economic growth activities. So that is a potential way to then regulate the BDCs some more.
Staying with the commercial banks, I'm also thinking, are you sure they will not even be overwhelmed by the rate of demand? Because many say the BDCs are at every nooks and crannies of the country, but the banks, they're just going to create a desk for forex dealings and all of that. But the BDC operators, you see them everywhere. Just drive out of my office now, you could see one just beside the roads, on the roadside, and some have their offices. There's a difference between BDC operators, and some say there's a difference between those the BDC operators and those that sell on the streets. But we all know them as the parallel market rates for us on the street, and when we want to get this currency. Do you think they can bridge this gap in direct terms, the banks?
So, like you highlighted, it's definitely a possibility that the banks will get overwhelmed because, in terms of access, like you had rightly said, you access it for the BDCs, you're able to access them more frequently and more easily rather than you would the commercial banks. So it's possible that the commercial banks actually do get overwhelmed. So that could question the sustainability of this policy, in the sense that you see the banks, you see the long queues, you see the manufacturers not being able to import what is essential for your economic growth. You see, maybe people for medical tourists that are not able to get their treatment in time. So that also is a question for sustainability. That questions the sustainability. Again, the black market premium also parallel market premium that you're likely to see even expand further would also question the sustainability of this policy. So it's something to really, and we have the history of 2016 where this was also done. The CBN in a sense cut out supply to the BDCs, but that was reversed, So these are things that it's on the word on the street questioning the sustainability of this policy. It would really just depend on how well the Apex Bank is able to manage these demands and essentially the supply of the forex in the market.
Let's now look at sources of getting forex now. That just came to my mind. Sources. We talk about remittances, and I want to look at the non-oil sector, that non-oil space. How can we also improve that space? That's somewhere I see that we can get enough of forex. If we can sell more cocoa, we can sell more of our farm produce, and export skills, and even the ICT sector, we can get more forex. What are we doing to take advantage? We are trying to block all of the loopholes, but how can we in-house open up and get some more forex in?
Yeah, so you're very correct in the sense that, so one thing that we know is that Nigeria is not short of output sources, right? We're just short of revenue sources. So that's why our focus has been over the years on oil. It's not for the lack of other sectors prevalent in Nigeria. It's not for the lack of activities in the economy. It's just because we have focused all our attention, all the necessary funding to that one sector. So if we're able to diversify, we're able to diversify our revenue now, not activity, not in the sense of activity, but in terms of revenue from these already existing activities, right? You're able to fund and increase funding for infrastructure. Like you mentioned, we have commodities that we clearly have a comparative advantage over other countries. We have those commodities and we have the reserves of those commodities. We just need then to improve our infrastructure. If you are able to take, you mentioned cocoa. Cocoa was a cash commodity for us back in the days, but right now what we are seeing is the lack of infrastructure, the lack of storage, the lack of distribution networks, the lack of road networks, distribution facilities has then affected what you are getting, the cash you are getting out of the commodity cocoa and other commodities like that. So what we need to do is then diversify our revenue, and we can do that by increasing the funding, increasing the intervention initiative, increasing your, in a sense, increasing your attention, right, to these other sectors, and then, becoming aware that there are actually other sectors beyond the beyond the oil sector, right? They are driving their potential opportunities in these non-oil sectors. So that is something, because like you mentioned, that would then increase our sources of forex, because right now our sources of forex is very limited. We have the oil sale, we have diaspora remittances or FDIs and foreign direct investments or foreign portfolio investments, in which case that is not even the investments we're seeing in terms of foreign direct or investments or foreign portfolio investments is not as it used to be, and the reasons are not far-fetched. So we definitely need to increase our sources of forex so that we won't put ourselves in this constant situation where your demand is constantly outweighing your supply.
Almost finally, while some still frown at this ban, some also argue that the CBN would have not outrightly stopped the sale of Forex to BDC operators. Some advised that they would have maybe streamlined their operations. That's on one end. Some say they would have also exposed the bad eggs, that's maybe those involved in financing terrorism or doing whatever that is wrong, that is against the law. Because if you look at in real terms, we have more than 5,000 BDCs and they employ 1, 2, 3 people. People are talking about job losses if at the end of the day these BDCs cannot survive.
So yes, I mean, it comes back to the stringent regulations for these BDCs. But in terms of, if you don't already have technology in place and, you have the data on these 5,000 operators that are existing and you're able to track their activities, it will be difficult for you to catch anybody or to say, oh, this person's a bad egg, right? So therefore, we need to put in place measures, regulatory measures, using technology, using data, using these different identification measures we have in place, to then identify who among them is the bad eggs. How can you, if worst case scenario, you revoke a license so that the others are then able to learn that, okay, this is, we have a regulator that is on top of things, a regulator that is overseeing the activities from end to end of all our operations. So that would then put measures in that if you put these measures in place, that would then, you are not, so in a way, you're not cutting off the supply completely, you're just increasing your regulation of them. And that, like you mentioned, that is one that is something that a lot of people are suggesting, right, in terms of, so that you don't have the parallel market premium happening. You can still regulate, the option is still available to regulate these BDCs in a more stringent way and put in place the technology you need to be able to track their activities from end to end.
Yeah, so let's wrap this up. What are your projections? What do you think? Let's do a little bit of outlook. If we continue like this and with what we've seen, yes, it might be too early to jump into full conclusions, but let's just project. What do you think? Do you see the naira appreciating against the greenback, or do you see it otherwise? What do you think would happen moving on towards the end of the year?
Okay, so I definitely think one thing that might be happening is a widening of the gap between your official, because now what you're having is more supply to the official channel. So your official market is not under pressure, but your parallel market, and that would always happen if if you have these different markets across, right? So your parallel market would then be under pressure, and what could then happen is if the parallel market goes to, let's say, 600, I'm not saying that's what will happen, but let's just project if that happens, right? And because the CBN is so involved, the CBN really wants to regulate both the demand and the supply of Forex. Those are what you can call like psychological levels, like levels where it starts to trigger something. It starts to, get people worried. It starts to, get your investors worried, get even the CBN worried. That would then question if they'll be able to sustain this complete ban to the BDCs. So it would really depend on how the Apex Bank is able to manage this in terms of managing both the demand and the supply. That would then determine what your naira would be trading at. But essentially, I think for now the official market is sorted because there's increased supply. But when you look at the parallel markets, it's a completely different story.
Interesting talking to you, Semi-Senior Corporate Finance, Deloitte Nigeria, Temitope Olugbile. Thank you so much. Enjoy the rest of your day. Thank you for your time.
Thank you.